Selamat malam Bapak, Ibu, dan seluruh peserta webinar. Selamat datang pada webinar pada malam hari ini yang diselenggarakan oleh Phillip Futures yang berjudul Trading Opportunities in the Gold CME Micro Indices. Perkenalkan, nama saya Krisela Erika, dan pada malam hari ini saya akan menjadi host di webinar kali ini. Sebelum kita memulai webinar pada malam hari ini, izinkan saya menginformasikan mengenai outline webinar yang akan dilakukan. Akan dibuka dari sesi pembukaan, lalu pengenalan PhillipCapital dan Phillip Futures, dilanjutkan dengan pengenalan pembicara, yaitu adalah David Ng, dilanjutkan dengan pemaparan materi oleh David Ng, sesi tanya-jawab atau Q&A session, dan ditutup dengan sesi penutup. Seperti yang Bapak dan Ibu bisa lihat bahwa setelah sesi pemaparan akan diadakan sesi tanya-jawab atau Q&A session. Jadi, jika Bapak dan Ibu memiliki pertanyaan seputar materi webinar pada malam hari ini, seputar futures trading atau seputar Phillip Futures, Bapak dan Ibu bisa langsung mencantumkan pertanyaan di kolom chat yang tersedia. Kalau di layar Bapak dan Ibu bisa dilihat di sebelah kanan. Atau Bapak dan Ibu juga bisa memberikan pertanyaan melalui official WhatsApp Phillip Futures yang ada di bawah di 0855 9906 525. PhillipCapital merupakan gabungan perusahaan layanan finansial yang didirikan pada tahun 1975. Kini, PhillipCapital telah tersebar di 15 negara dengan headquarter-nya yang terletak di Singapura. 14 negara lainnya adalah Kambodia, Malaysia, Thailand, Vietnam, China, Hong Kong, Jepang, Australia, India, Turki, United Arab Emirates, UK, France, dan juga USA. Phillip Futures sebagai member dari PhillipCapital, PT Phillip Futures merupakan sebuah perusahaan pialang perdagangan berjangka komoditi yang berada di Indonesia. Phillip Futures telah bergabung sebagai anggota kliring Indonesian Komoditi Derivatif Exchange atau ICDX dan Jakarta Futures Exhange yang dikenal dengan JFX untuk ikut serta dalam mengembangkan perdagangan komoditas di Indonesia. Phillip Futures juga terdaftar di BAPPEBTI atau Badan Pengawas Perdagangan Berjangka Komoditi dan memiliki izin penyaluran amanat luar negeri atau pasar berjangka asing. Misi dari Phillip Futures adalah membantu nasabah untuk mencapai kesuksesan finansial di pasar komoditi dan juga derivatif. Phillip Futures bringing global markets closer to you. Baik, setelah sesi pengenalan Phillip Futures dan juga PhillipCapital, izinkan saya juga memperkenalkan speaker spesial kita yang akan membawakan materi pada malam hari ini, yaitu adalah David Ng. David Ng sendiri merupakan seorang trader, proprietary trader di ICDX yang terletak di Malaysia. Baik, Bapak dan Ibu bisa melihat biografinya yang tertampilkan di layar Bapak dan Ibu, yaitu adalah speaker profile kita pada malam hari ini, yaitu adalah David Ng. Baik, tanpa berlama-lama lagi, Bapak dan Ibu please welcome David Ng. Hello, David.
Hi, Sheila. Can you hear me?
Yes.
Just to check. Yeah, okay. Just going to present my slides now.
Okay.
Yep. Are you able to see my slides, Sheila?
Yes, clearly.
Okay. Yep. Thank you. Firstly, thank you, Sheila, for the wonderful introduction. And obviously, thank you, PT Phillip Futures, as well as CME for organizing this webinar tonight. Hopefully the audience, you guys are well comfortable at your seat, and hopefully we can tune into this webinar entitled Trading Opportunities in the Gold as well as the CME Micro Indices Market. Now, just with any other presentation, I think purely today's material will be presented with the purpose of purely educational. There will be no recommendations or do consult with the right investment advisors for further guidance and even for further recommendation. So tonight presentation is purely on an educational purpose. Now in the next 30 to 45 minutes, this is what I'm going to cover. I think when we touch on the topic of gold as well as the CME micro E-mini indices, it's important for us to look into some of the fundamental drivers Now, me being a trader, a full-time trader in this market, I do look into the fundamental perspective as well as a technical guidance as whenever I navigate the market. So I think I'm just going to start off with giving you a bit of the fundamental dynamics, some of the key factors that I watch out whenever I trade the market. And obviously, I also look into some of the key market relationships, especially when you're trading gold. There's certain markets that you always look into. We call it indicators, that where we can see whether gold does have a relationship with a particular market or not. Same goes for US indices as well. And last but not least, I'm just going to, at the last part of my webinar, I'm just going to touch a little bit on the trading plan, which by using simple technical analysis tools, which probably you can use as well after tonight's session, that you can probably use it to begin your trading journey, especially with the CME micro in-minute indices as well as the CME gold market. Now, just before I start, I'm just going to give you a brief overview on how the world economy has actually performed. As we all know, we are actually currently still in a pandemic. Obviously, there's pocket of countries, especially the developed countries, have shown very good resilience. Those economies are starting to recover. Southeast Asia, of course, obviously certain countries are still suffering further waves of COVID-19, and obviously certain economies are still being in a lockdown. Especially, my home country, Malaysia, we are still facing a lockdown here. So obviously there's discrepancy in terms of the recovery. But nevertheless, I think the year 2021 is the year where we see a strong recovery. Despite year 2020 was pretty much an offset year. That's the first year, I think, in many decades, we have seen a negative growth in totality. So I think year 2021 is a theme of recovery. Obviously, economies are going to recover eventually or with a vaccine drive, and many countries are starting to reopen. So I think that's a theme that we're going to look at. So whenever you trade the market, clearly indices market are pretty much on an uptrend. There's always a saying, you always should be trading in the direction of a trend rather than you should be trading against a trend. Business of trading against a trend is always a difficult business. So I always believe that when the trend is strong, you should ride along the trend. So obviously currently we are riding on a strong uptrend, uptick in the global economy, and that's the trend that we should be riding on. Now, if you look into commodities, I think 2021 is also a year of commodities rally. We have seen massive rally in prices across all major commodities. Be it in Indonesia and Malaysia, key commodity to us is obviously the palm oil. You have seen palm oil prices in the Malaysian market has rallied to very high levels, including other grains market as well. Precious metal gold, despite a strong rally last year, we see prices start to soften early part of this year. Now, I think across other major commodities, we also seen prices start to decline. I think after China has reiterated that they want to control the market, they want to control the price rally, I think that really caused the commodities market to suffer quite a bit. So I think that's one thing to take note of. I think commodities, despite the rally you are seeing, we are starting to see a bit of weakening pace. I think that's something that we should be watching out for. But all in all, I think if you're in the precious metal space, you are trading gold, I think the overall mid to longer term trend is still pretty much positive. Later on, I'm in my slides, I'm going to touch on some of the factors that could contribute to those positive views. But generally, I think commodities across the board has a strong rally early this year. Now, if you look at in the indices market, I think obviously you compare all the four major indices in US, be it the Nasdaq, the Russell 2000, the S&P 500, as well as the mini Dow Jones, you can clearly see that the Nasdaq is leading the pack. A lot of technology counters, especially second half of last year, rallied on a very strong ground. Given that the fact that we're in a pandemic, it necessitates the need for us to shift into a technological drive. I think the way we deliver this webinar tonight is also testimony on how technology can be beneficial to life in a pandemic. So obviously, I think a lot of technological counters in US has actually rallied to very strong levels. Therefore, I think Nasdaq was a prime leader in this space. So if you look at this chart as well, the Nasdaq index has actually out-rally three of the other major indices. Now, what is important to take note is that Russell 2000 is a major US index. It measures the 2,000 companies that is in the US market. What you notice is that the Russell 2000, which is M2K, the micro mini Russell 2000 contract, you can clearly see that the index has actually outperformed the Dow Jones as well as the S&P late of last year. So if you want to see the strength of the economy, you always see the companies that's doing well. So a lot of the major companies in US especially, they did very well in the second half of last year and early part of this year. That's why the Russell 2000 index has actually performed better compared to Dow Jones at S&P 500. Now, the key question we need to ask ourselves is, can this outperformance continue? One of the key major indicator that we should watch out for is that when we start to see Russell 2000 index starts to show weaknesses in terms of its current trend, I think that's where you should be careful. Right now, we still see a lot of strength because given that the economy in the US are starting to reopen, so the index continue to perform. But it looks like the exhaustion is coming, and we should be careful going forward. Now, I think if you look into the world economy, everything is rosy, especially the developed economy. You look at world trade growth as starting to recover. In fact, it's almost reaching the pre-pandemic levels. So it goes to show that economic activities are starting to recuperate, and there's a lot of activities going around the world. So as many countries are starting to vaccinate their population and many countries are starting to come out from lockdowns, the world economy is just going to go better and better. So I think it's careful to watch. We don't see any sign of weaknesses in the near term, but the longer narrative it still shows that the global recovery is pretty much on track. World trade is improving, and you look at the freight rates, which is represented by the chart here, the Baltic Dry Index. Those rates are actually at pre-pandemic levels. So I think it goes to show that the economy, general world economy, is indeed recovering. Now, going into policies, whenever you trade indices like the US indices, it's very important for us to watch out what the Federal Reserve is doing because they represent the central bank US. Any decision that they do will definitely have impact across all major markets. So if you are trading the market, you always be very wary when it comes to FOMC meeting because whatever decision that they take will have an impact in the market for a period of time. So if you just look at some of the FOMC meeting previously back in March, there's already start a talk that they probably might hike interest rates, but most of the Fed members are still pretty much reluctant to raise interest rate that soon. But that tone has changed in the last FOMC meeting back in June, where they start to see that the pickup inflation is worrying, to a sign that probably they might start to taper earlier than usual. So if you look at the dot plot here, you can clearly see, based comparing March 2021 FOMC meeting against the June 2021 FOMC meeting, you can see certain members are a bit more accommodative to increase interest rates. And obviously, this will cause market jitters. Indeed, you look at there's a bit of retracement once FOMCs did give a sign of tapering. You can see some of the interest market corrected to about 3 to 4%. So it goes to show our market is actually very sensitive to interest rate hikes. And I think that's going to be a theme for us to continue to watch for next couple of months. In fact, even to early parts of 2022, because interest rate is going to have a repercussion effect across all major asset classes. So I think that's something to watch out. If you're trading the market, definitely watch out on FOMC meeting. Now, obviously, there's other narrative that's also start appearing in the market, which is the story of inflation. And obviously, you look at some of the US numbers, inflations are indeed quite worrying. But given the fact that all the while Federal Reserve is always maintaining 2%, as a target, but you look at the latest numbers, they're way above those numbers. I think the latest figures is also close to 5%. There's also projection that probably by year end this year, those numbers can even go to double digit. Now, this is worrying because whenever we have inflationary pressure, Federal Reserve will have a lot of inclination to try to raise interest rates as a way to control. So obviously, inflation is something to watch out. A lot of the question that's pertaining to inflation is always whether is it a temporary phenomenon or whether it's transitory or whether it's permanent basis. The way I look at it, I think inflation is right now looks like temporary basis, but eventually I think price pressure is always all in all is very sticky. Once you raise the price, it's very difficult for you to bring it down. So going to the medium term, inflation is going to be an issue. And I think that's why FOMC meeting, previously the Fed members are a bit more, this time they are a bit more accommodative to really raise interest rates, because if you don't control inflation at this onset, it's going to create a bigger problem later on. So I think that's something for us to watch out. If you are really looking to the US market, I think everybody's paying attention on interest rates going forward. So, FOMC meeting and interest rates and inflation levels, these are the three key factors that may affect the market going forward. Now, obviously, year 2021, when we went into the onset of pandemic, we didn't really forecast that the market could recover that sharply. But indeed, we did recover very sharply. Based on many of the other financial crises that we're in, if you compare to the 2008 global financial crisis, that crisis took about, I think, was about 8 quarters for the economy to start to see positive sign. Now, COVID pandemic only took 2 quarters or max 3 quarters for US. China only took 1 quarter. So it goes to show that central banks around the world did really put a lot of energy into trying to resuscitate the economy back to its normal footing. So I think indeed right now we are witnessing a very strong pace in recovery we have not seen before. The speed of recovery is indeed tremendous. So obviously, I think if you want to look for signs of red flags in the market, so far financial conditions are not showing you that, and recovery are still in progress. So definitely, I think the general economy, the sentiment is still positive. So now going down into further factors, you look into unemployment numbers. Last year we saw a big spike in unemployment figures across the world. US is obviously, we have seen very high numbers during the early start of the pandemic, but those numbers have started to gradually come down. And obviously, capital investments are also starting to come back into the market. So generally, I can say US is in a very strong footing right now. So obviously, the market itself is reflecting those fundamentals. Now, this chart here is quite interesting in a way that it shows that how many of the 75% of S&P 500 stocks is trading above the 200 days moving average, which indicate that the market is the particular counter on the S&P 500 is on an uptrend. And I would say majority of this counters in S&P 500 has actually stayed above the 200 days moving average for quite a major period of time. I think it's averagely about 100 to 150 days. So it goes to show that the recovery you are seeing in the economy is slowly translating to stronger stock prices, and therefore supporting the index going forward. So imagine this: every dip that you see in the US mini indices, a lot of buying opportunity. People are buying into those weaknesses and therefore supporting the market. If you want to see correction, I think every correction pretty much to the investor is an opportunity for you to be in the market. Now, if you look into sectors, obviously, I think last year the theme was really, defensive sectors like healthcare, like medical equipment. Those were really the solid themes. But late last year and early part this year, we really start to see the thematics start to change. We are looking into cyclicals. So industry like oil and gas, consumer goods, constructions, those industries are starting to come back alive. So a lot of funds are being poured into this economy. So all in all, generally the index will still perform well. But the major theme has changed. This year, I think a lot of focus are into consumer goods, financial services, oil and gas. Obviously, the one sector that is still suffering is travel and leisure. But I think that starts to change in the US. Obviously, international travels are still restricted, but domestic travels are starting to come back alive. I think that's, if you look into place, or you want to look into sectors that you want to find opportunity for, I think in US the cyclical industries is still give an opportunity for you to be invested in those markets. But if you're trading the indexes, I think the overall trend, uptrend, there's still leg to grow. But eventually, I think every uptrend you always find exhaustion. I think that's where you should be careful as well. Now, going into the longer term picture, I think this is what worries me in the longer term. Longer term could be in the sense that it could be more than a year, because I think that is always the key important thing whenever you look into this type of markets. Just like last year, I was just showing you, the recovery was indeed very steep. The reason being is because you look at how much of the debt is being filled to drive those growth. So take for example US, those balance sheet, I think, in the 2008 financial crisis, it took them about $2 trillion to bring them out of the 2008 financial crisis. I think US this time around for the COVID-19 pandemic they spend almost 6 to 8 trillion US dollars. So it definitely grow their balance sheet in terms of their debt levels. And you look at global totality, we are reaching to levels where we have not seen before. It's almost like 3.5 times of their total global GDP, which is alarming. The key question is, always people were saying that, hike in interest rates, will this affect those heavily indebted countries like US, for example? Because increased interest rates, you increase your debt payments. I think this is going to be a concern going into the medium term. And I think that's very, you should be taking this with a cautionary tale. I think this is something for us to watch out in the medium to longer term. It's not going to affect the market in the short term, but eventually those debts that these countries accumulate with higher interest rates are expecting in the next couple of years is definitely going to have an impact. So I think do watch out on this space, and eventually I think this goes to tell you that asset classes like gold could be in favor going forward. Now, I think when you trade the US indices, there's always this factor, the geopolitical tension that's always surrounding the market. As a trader, we're always very scared of geopolitical tension, because geopolitical risk is something that we cannot predict. Government head of states could just come out one day and just say, I want to implement this policy. Especially during the Trump era, it was as a trader, it was quite difficult because you always have his policy that is always affecting markets. So in a way, there's no stability in that. And geopolitical risk is something that you have to be very mindful of. Despite, during the Biden presidency, there's a bit more stability in terms of his foreign policy direction. But again, it is still something that's emerging. There's always this debate on US and China political tension, which is also rising day by day. And I think, we just have to factor this in, especially when you trade the market. I think going forward, US-China relationship is going to get more intense in a way. And I think that's pretty much going to see where China is going to hit to. Now, if you compare both markets, you can clearly see, if you compare the S&P 500 against the CSI 300 in China, you can clearly see that, US indices does show a bit more resilient compared to the China index. But then again, I think you look at the Chinese RMB, the renminbi, I think the currency itself has strengthened quite a lot in recent times. So I think it goes to show there's a lot of political play, political power balancing between both two emerging strong countries. Now, this I just will show you the seasonality chart of the S&P 500. This is based on 2 decades of data. You can clearly see, July, August, September is a period of consolidation. You could see a period of a slight correction in the market, but when coming to October, November, December, that's where we should see strong rally in the index itself. But whether 2021 could this follow the historical pattern, it might or it might not be, but it does give you a guide. So right now we are going into the second half of the year. We are going to third quarter. So third quarter usually is the weakest quarter for the whole index. But as we go into the fourth quarter, that's where we should see a bit of rally. As we go into the Christmas rally, the feel good effect. Generally the index will be stronger. So as a trader, we always look at the seasonality as to which period we are going into. Are we going into a stronger period or are we going into a weaker period? Now, obviously, as a trader, we always have to be sensitive to sentiments, because sentiments can derail markets. Just like, for example, one of the best gauge of sentiment in the market is always the VIX index, the volatility index, which takes into account the implied volatility of your S&P 500 options. So we always use VIX index as a gauge of market sentiment. So whenever we have a low reading of VIX, which is about 12 to 20, those levels are pre-pandemic levels. And that usually indicates the market is complacent. There's not much risk in the market. Everybody is having a feel-good factor. Now, the problem is that when VIX starts to go above 20, historically speaking, the average is about 15 to 20. When it climb above 20 to 25, that's where you should be a bit more concerned, because generally the market participants are putting a bit more risk in the market. and definitely, it might have an impact on your S&P 500 or even Dow Jones for a matter of fact. So, do watch out on risks. It does indicate where risk is present. So, a low risk number right now is just to indicate the sentiment is still pretty good, but things can change rapidly. If you look into the week's term structure, I think a lot of people are factoring in that there might be a bit of market volatility coming into the fourth quarter this year. So if you are trading the index, do watch out on the wicks because it does give an indication how volatile the market is going to be. But right now, it seems that the levels are pretty much pre-pandemic levels. We don't see much of a risk, but going forward, it might change. The picture might change. So I think that's something for us to take note of as well. So I think that's on the US indices in US indices outlook. I think generally the economy is doing well. The US indices has pretty much have a strong rally, and that rally will continue as long as the economy starts to give a lot of positive numbers. But do be careful when those fundamental economic indicators are showing you sign of weaknesses, especially sign of exhaustion. I think that's where we need to be very careful. That usually signal that that could be reflecting in terms of correction in the US indices market. Now, going into gold. Gold is slightly interesting in the sense that it's pretty much an underperformer. Of course, if you compare as a commodity asset class, most of the commodity asset has been improving pretty much in their price late last year and this year. Gold obviously is considered a precious metal. It does perform, but it is still fair below other major asset classes. So I think gold on the shorter term narrative, it shows that pretty much the market is risk on. So everybody is in the equities market. So a lot of people are paying less attention on gold. But the key question is, as valuations gets higher, as people are a bit more risk averse, and when there's risk off sentiment, I think everybody will rush into gold. So gold does give you the kind of store of value when especially during period of uncertainty. I think that still remain very relevant in the gold market. So in the medium term and longer term picture, I think gold story still remain positive. But obviously short-term fluctuation, that's something for us to be wary of. And if you're trading the market, you just have to be careful as well. So just to give an overview of gold price for the past 2 decades, so you can see that gold is in a period of a very long consolidation. I think it was almost 7 years, and it finally broke up the range 1,000 to 1,004 range just late last year. Where the gold market just rally whenever I think that time US dollar tanked. US economy was in the deep doldrums. The global economy was indeed in the bad shape. So gold rallied to as high as 2,000, and it starts to decline thereafter. But eventually, you look at it, I think the trend is still pretty much intact. The uptrend is still intact. So it goes to show that gold still has potential on the upside. It's just a matter of time. So I think the overview of gold market is, in terms of price, it still does indicate the strong uptrend is still pretty much intact. We are just waiting for it to cross the certain key levels. Now, I'm just going to share with you a little bit fundamental dynamics of gold. So whenever you look into fundamentals of gold, it's actually very balanced in a sense that the global demand for gold every year has been very stable. And obviously, during a crisis like what we are witnessing now, especially the pandemic crisis, the health crisis that we are in, gold will always be in favor. Reason being is because there's a lot of uncertainty. So clearly, you can see, I think last year, beginning of June last year, you can clearly see there's a lot of demand in terms of investment demand coming into the gold market. Look at GLD, the biggest ETF, gold ETF in the market. It recorded strong inflows into the ETF. That shows that the demand for gold as a safe haven asset during critical times is relevant. So I think going forward, as we going to encounter period uncertainty, gold will always be in favor. Now, the 2 biggest demand for gold is always in jewelry and obviously in investment demand through the ETF flows. So jewelry is something very physical, and as long as prices are good, demand from China and India in terms of jewelry demand will always be there. So I think whenever you look into gold as a demand picture, you always look into China and India because these 2 countries demand a lot of jewelry. I think I think first quarter this year we saw jewelry prices in China start to rise to levels we have not seen because because of the Chinese New Year, the Lunar New Year, and this key festival demand. So going into the third quarter, India will always have some of the key periods where they like to buy gold as part of their festive season. So that also will support the market. So normally the first quarter, the third and fourth quarter are the strong periods in the gold market in terms of the jewelry demand. So really, if you want to look into the gold market, especially in terms of how the demand picture, we always look into the jewelry demand coming from China and India because these are the two biggest markets when it comes to demand for jewelry. Now, obviously, the second major factor is the ETF. Late last year, we have seen a strong rally in prices, and that shows the inflow into the ETF was very strong. Coming to the early part of this year, where global economy starts to recover very strongly, especially in US economy, a lot of people are selling their gold and moving into the equities market. That's why you can see there's a lot of outflows in the ETF early part of this year. And that goes to show why prices didn't try to breach the 2000 level. And in fact, it retraced below and stayed below for quite some time. So obviously, of late, we still see outflows coming out from the ETF market, but those outflows are starting to diminish. So it's very crucial whether the current levels is supportive. As long as outflows are diminishing, likely we'll see prices to hover around this area. But if outflows continue to be quite rapid in the coming weeks, then we should see gold trying to reach another new level, which is about 1006. That's where it will be a fair value for the past 2 years. So I think it's crucial to watch the gold development in the next coming weeks, especially in terms of their investment demand. Now, if you are someone trading a commodities instrument or commodity classes, it's important for us to look into this, what we call the CFTC data. Now, CFTC always reports the net position of the market, whether they are net long or net short for a particular commodity on a weekly basis. I think those data is very important. Again, you can use this to gauge the market sentiment. So if the market participants are holding a lot of long positive positions, it goes to show the market is generally net positive, and that means the market sentiment is still pretty much positive. But if those net positive positions starts to decline on a weekly basis, I think that's where we have to be careful, because when sentiment change, when market sentiments change, that's where usually the turning point in prices. So of late, you can see net position starts to decrease in early part of June from net positive. Those net positive positions starts to diminish every week. That's why you can see prices starting to retreat. I think this was in anticipation of FOMC meeting in June. So you can clearly see as one of the important tool for a trader whenever you trade commodities is always look into the CFTC data to determine the net sentiment of the market. So I think that's another crucial tool if you are trading the gold market. Now, obviously, I think in the earlier part of my webinar, I did mention inflation is a sign of concern. It's something that we should be worried in the medium to longer term. And obviously, inflation is, whenever we have a high inflationary environment, it's always positive for gold, because gold is always deemed as an asset that hedge against inflation environment. So obviously, numbers coming from US is showing you inflation is there, it's coming, and obviously gold is in favor. So you look at yields, the 10-year yields, it shows that there's a big rally that indicates that the high interest rate is very imminent. So I think inflation story, if it's continuing to stay, gold will always be in favor. I think that's something for us to really be taken into consideration. As long as inflation doesn't subside or doesn't fade, which I think is quite unlikely, given that a lot of major asset classes are showing you increase in prices. That's going to have an inflation effect, and that will continue to support the gold market. And I think second important factor that can really support the rally in gold price is as government of the world, whether it's in US, whether it's in Japan, whether it's in Europe or UK, those economies continue to pump prime their economy through monetary easing, which means that they have inject so much money into their own economy that the monetary base has expanded rapidly. The problem is that when you start to see governments doing this, expanding their economy, expanding their currency, without proper activity, economic activity backing it, you start to see inflation starts to kick in as well. So obviously this again shows the story that's supportive for gold in the longer term. Now here what I have is another interesting chart. You can look at it. If you take the total gold supply and you multiply with the gold price, you get a total gold market capitalization. And you compare it with, in US we measure the money supply by M2, money supply measurement. You can clearly see over the years, the US government has actually printed a lot of money into the economy. So, but if you look at it, I think gold is, currently, if you just look at the market cap itself, is insufficient to balance up the increase in M2 supplies. And during the COVID pandemic, I think, US Federal Reserve printed a lot, I think close to 10 trillion US dollars into the economy. I think it goes to show that inflation eventually will creep up, and it's something that it's going to benefit gold in the longer run. So I think, if trading the gold market, this is something that you'll be mindful of if you are thinking of having the longer term view of the gold market. Now, just to compare relationship of gold between other asset classes. So obviously when you compare gold and US dollar, it's always an inverse relationship. Whenever you can see the strength. So in this chart, I have the dollar index is represented by the gold color, and the blue color is represented the COMEX gold price. So you can clearly see that whenever you see a weakening dollar, that's usually beneficial for gold. And whenever you see a stronger dollar, that usually is not beneficial for gold price. But of late last year, we start to see there's a bit of linkage between both markets. Every time when dollar index decline, we see weakening in the gold price. But that's usually a very short period of time. But when you see this year coming to this year, you can see strength in dollar index. That usually spell weaknesses for the gold market. So if you are trading the gold market, it's important for us to watch out the dollar index strength, because it does display a bit of historical relationship in the sense that both markets are inversely related. Now I'm just not going to touch too much on the seasonality, but one important for us to take note is that if you look at it, gold prices tend to be stronger in the third and fourth quarter, especially when it comes to the year end, because that's where you see a lot of festivities. Especially in India, jewelry demand tends to pick up around the third quarter, because there's certain key dates where the Indians will really like to buy gold in the market. Now, obviously, there's now talks of taper tantrum. Taper tantrum is basically, when the US Federal Reserve starts to roll back their quantitative easing. Market is always very jittery about this. So obviously, when we did see a very similar scenario back in 2013, when the US Federal Reserve decided to pull back some of the quantitative easing, you can see how market reacted. So gold just plunged because the US yield treasury has actually increased because there's an increase in interest rates. So there's a lot of risk-off sentiment. So obviously, now with the talks of rolling back quantitative easing, I think that seems to appear as another repeat of a taper tantrum. So do watch out on this space whenever you look at interest rate, whenever you look at Federal Reserve policy, whether it might impact your gold market. So you are trading the gold market, do watch out on this taper tantrum, because I think history may repeat itself whenever Federal Reserve decided to roll back some of their QE initiatives. Now, I'm not going to go too deep on Basel III requirements. This again is another factor that you should be paying a bit more attention. Basically, what this Basel III is recommending is that for most banks across Europe and UK, even parts of US, they should start adopting a Basel III on a voluntary basis, whereby if those banks are holding gold, it could consider gold as pretty much a tier 1 asset. That will really shore up their capital. Now the key question is that the treatment of unallocated gold, which means those paper gold, is going to be a bit more different in this Basel III requirement. So I think just yesterday some of the Europe banks are starting to adopt this Basel III requirements, whereby for their paper gold market, they really need to put a bit of buffer, which ultimately means higher cost for them to hold unallocated gold market. So eventually this will, if there's a strict adherence to this Basel III, basically central banks will need to buy more physical gold from the open market just to shore up their capital. But again, I like to highlight this is on a voluntary basis. It depends on whether central banks decided to pick this up. So again, it might impact the market, or it might not have a big impact in the market. But again, these developments are important because eventually this will have an impact for gold prices if many of the countries are starting to adopt these Basel III requirements. Now, just to show you gold against the equities market, you can see major rally in the S&P 500, the Dow Jones market, the Nasdaq, even the Nasdaq market. Now, if you compare gold against the equities market, generally both are pretty much in line. The truth of the matter is that whenever you have a risk on equities market, normally people avoid gold. They will not put into gold because gold is considered as a non-interest bearing asset. But the funny thing is that, you look at the recent rally in S&P 500 and you compare that to the rally in gold, it's pretty much in line. Obviously, of late, you start to see there's a divergence, which means that, the US indices continue to perform, but gold market actually, starting to soften a bit. But pretty much the trend last year is still pretty much intact. So both these markets are actually quite parallel. So if you are trading on this basis, you just have to be careful. There's a period of time where they actually diverge, and it's the normal characteristics of gold market because gold is supposed to act as a hedge, against your equities market. And I think to a certain extent, gold will perform that duty in certain period of time, but not all the time. So I think that's something for us to watch out as well. Okay, I think what's interesting about this chart is, if you look at gold for the past 20 years and you compare month-to-month performance, so green color is to highlight that it's a month-to-month positive price performance. Red color is to indicate a month-to-month negative. Now, what is important I want to highlight is that you look at July and August. This, for the past 20 years, these 2 months can consider is quite a balanced month. Especially August, I think is a strong month because out of the 20 years, we only have 5 out of 20 years that is a down period for the period of August. So August is considered a very strong month. But when it comes to September, October period, it's pretty mixed. And in fact, you look at October is actually quite negative. Now, if you look into other periods that is bad for gold, in terms of the month itself, you look at March is actually pretty bad. May also is pretty bad. So seasonality does play a role because as any commodities, we have a cycle, we have a season where, there's a period of time where people like to buy gold, there's a period of time where people don't like to buy gold, there's lower demand, prices going to come down. So it's important for us to distinguish which are the period that is positive and negative for gold. Okay, so coming to the last bit of my webinar, the last part, which I'm going to share with you some of the key technical tools which I use in order to trade the market. Now, first thing first, whenever you want to create a trading plan, you need to identify what type of trader you are, whether you're a swing trader, you're a scalper, or you are pretty much a position trader. Now, I, for one instance, is a trend trader. Normally, if I see a market that's trending, I'll be in the market. Now, there's always a famous saying, you always want to trade with the trend, not against a trend. I always believe in this. If you are in a business trading against a trend, it's not an easy business to be against the trend because you are pretty much against the market force. So the first thing we need to do is that you need to identify the market trend. And there's a couple of ways to do that. For me, I think the easiest is to use a moving average. In this example, I'm using a 200 period exponential moving average, which probably indicate about 8 to 9 months worth of data. So when those prices are trading above the 200 period EMA, those are the period we consider a bull trend, a bullish trend. Now, if prices are trading below the 200 EMA, that means the market is actually pretty much on a downtrend. So you can clearly see the micro E-mini. If you put a 200 EMA, for majority of part in 2019, most of the prices are trading above. So technically, the market is in the uptrend. Now, coming to 2020, obviously we have the COVID-19 pandemic. We have a sharp reversal in the market. Once it broke the 200 EMA line, the market has no mercy. It went on a free fall. And I think within early parts of May, we start to see the market recover, and it traded above the 200 EMA line. And that's where the market is starting on a new uptrend cycle in the market. So the 200 EMA line does give you pretty much an instant view of where the market is trending. obviously, if prices are trading just on the sideways market, just along the line, that goes the market is on the sideways market. So when you are trading on a sideways market, you need to use a different strategy. But first is always to identify the trend. Whether are you in an uptrend market or are you in a downtrend market? Now, besides using the 200 days EMA, you can always obviously looking at the chart, you can distinguish whether the market is on the uptrend or downtrend by simple fact that you look at the peaks and the troughs. If the peaks are getting higher and higher and the troughs are also getting higher and higher, that means the market is on an uptrend. Vice versa, the reverse is true, which means that if you look at the peaks are getting lower, the troughs are also getting lower, that means the market is in the downtrend. And obviously, when you look at candlesticks chart, or whether it's even on a bar chart basis, you need to be always familiar with patterns like ascending triangle, trend lines, drawing trend lines. These are all key crucial for us to identify where are the support and resistance areas for a particular market, because eventually market is going to test those areas, right? And market is very sensitive to all these points. So if you are trading a market, it's very important to recognize patterns. There's a lot of patterns. You can pretty much Google about it in the market, and some of them are very repeatable. So your famous head and shoulder, your cup and handle, those are also considered bar chart patterns. So it's important for us to identify patterns as well. So if you look at gold futures, I think pretty much last couple of days ago, we saw an ascending triangle pattern. It broke that, but it couldn't break above the upper resistance. Therefore, I think prices trading above the 1,800 again. So it's crucial to watch. So technically speaking, the psychological level for gold is at 1,800 US dollar per ounce. Those are the major resistance points. If you look at Dow Jones, obviously, if you draw what we call a parallel trend channel, technically the market itself is in the trend channel right now. So when you are trading in a trend channel, obviously if the market is pretty much on the sideways market, it's still on an uptrend, but it's on the sideways basis. So market tends to trade at the upper and lower point between a band. And you always watch out whenever prices break, whether it's above the upper trend or the lower breaks below the lower trend, that's usually a signal that it's going to be a trend reversal, and that's important for us to take position whenever you are trend trading. Now, I think once you identify the trend, it's important for us to look into how strong is the trend, whether the trend can continue to perform the uptrend or whether the trend is going to head to a possible reversal. I think one of the best trend strength indication is the ADX. So obviously, if you look at ADX value, anything that is above 50 is considered strong, above 70 is considered overbought, anything below 30 is considered pretty much a weak trend. So right now, if you look at it, I think the pretty much the Dow Jones as well as the S&P 500, the uptrend seems to be exhaustive because you look at the ADX value is below 30. So it goes to show that even the uptrend you are seeing right now in both markets, it may tend to reach an exhaustion pace. Because if you look at the ADX, it's pretty much telling you it's going to be a sideways market for quite some time, despite it's still an uptrend market. So you have to be very careful, which part of the section of the trend that you are in. Obviously, you want a trend where, you want to be in a trend where the strength of the trend is pretty much refreshed. You should be looking at ADX value above 50. So right now, ADX is trading below 30. That indicates that the strength they are seeing in both the S&P and Dow Jones is showing you a bit of weakness, and that's where you should be careful. Now, I think I just want to put this in because I think it's also quite critical for us to assess the sentiment of the market as well as how strong is the current trend in the market. So what I have here is what we call the NYSE Bullish Percentage Index. You can Google about it. I'm not going to go too deep into the technicalities. What basically it tells you is that, if bullish percent index is basically a calculation based on a point and figure chart basis on all the bullish patterns of all the stocks in the NYSE. So, if you have anything above 50, it shows you that the overall market is on an uptrend, it's positive. Anything that's below 50, overall the market is negative. But what I want to highlight is that, currently, obviously the market is above 50, the percentage point index is above 50. That means the market is still positive. But you look at it, the trend is actually exhausting. So it again highlight that the current uptrend seems to face a lot of headwinds. So reversal might be soon, or rather correction might be coming. Now, if you look at the chart on the right, the Russell 3000 index, again, I think this to indicate that how many percent of the members or members company in the 3000 companies as in US is trading above the 200 days moving average. So obviously last year we're seeing strong recovery. A lot of companies record good earnings. So those stock prices are above their 200-day moving average. But just off late, some of the companies are starting to show weaknesses in terms of their price. I think again, this is showing you the sentiment, the bullish sentiment might face a bit of resistance going forward. Okay, I think the next part of it is showing you, besides first point to indicate the trend, second thing is always to use what I call candles. Now, in my example, I use a Heikin-Ashi candles. Heikin-Ashi candles are pretty much like candlesticks. The only problem is that in candlesticks, there's so many patterns that you can have. You can have doji, you can have Morningstar, you have so many other patterns. It can get very complicated. So in that case, I use Heikin-Ashi, which is actually a derivation of your candlesticks, which only take the I would say the average of your candles, your normal candlesticks. So there's only three distinct patterns about Heikin-Ashi. Number one is that you have red body bar and green body bar with upper and lower wick. That means usually the trend is weakening. And if you have a single wick, whether it's on the upside for a green candle, or whether it's a downside on the red candle, that shows that the strength is going to be very strong. And when you have a very small body, that means the trend is pretty much changing or reversal. Now, to put into practice, you can clearly see in an uptrend, you always see many green colored body bars. That shows the market is going on an uptrend. If you see a downtrend market, we always see a series of red colored body bars. That shows that the market is on a downtrend. Sideways market is always characterized by a series of red and green, which you cannot distinguish whether the market is on an uptrend or downtrend. So in this market is what we call a sideways market. So if you're a trend trader, we tend to avoid a market that's always in sideways because there's not much opportunity to use your strategy at that point in time. So just by looking at Heikin-Ashi, you can probably use certain signals for you to make a decision to enter or exit the market. So say, for example, if you see series of red body bars, that means the market is on a downtrend. That usually signals you a sell signal. And you can follow the signal accordingly until the color of the bars has changed into a green color bar. So that's where normally you should get out of your position if you are shorting the market. So same goes vice versa. If you start to see a lot of green body bars and those body are getting wider, so that means that the trend is going to be an uptrend. So normally that's where you enter. And when you start to see red candles appearing on a very strong green colored bars, precedent to the red colored bars, that usually means that the trend is going to be exhaustive. And usually that's a signal for you to exit the uptrend market. So I think using Heikin-Ashi can show you or can distinguish the trend at the particular point in time quite clearly. Now, this is an example of Heikin-Ashi on a go example. So again, if you see green colored body bars, the strong green color bars, that shows the strength of the trend is going to be strong. And that's where you position and usually enter position on the bull market. So vice versa, if you see red colored body bars, that's where you should be shorting the market. Now, just using Heikin-Ashi for you to determine entry and exit may not be sufficient. So therefore, in certain ways, I incorporate exponential moving average as part of an additional strategy for you to make your entry and exit in a way more perfect. So what I did here is that to use a 9-period EMA against a 20-period EMA, and I do pretty much a crossover. So a crossover moving average strategy is that if you have a shorter term EMA crossing from below to the longer term EMA, that means the market is going to be bullish. Vice versa, if you have a shorter term crossing from above downwards to the longer term EMA, that shows the market is going to be bearish. So two confirmation here. One, you need to have red colored Heikin-Ashi bars, long red colored Heikin-Ashi bars, followed by a bearish crossover in your EMA. Bearish crossover EMA means that you have a shorter term crossing from above to the longer term EMA towards the below side, and that means the market is on the bearish mode. So if you want to look into a bullish position, it will be the opposite direction as well. So Heiken Ashi coupled with EMA crossovers does give you a better perfect entry and exit strategy whenever you look into the gold, even on the S&P 500 or even the Dow Jones market. Now, I'm not going to touch too much on using volume as another point of indication, but adding volume into some of your indicators, especially the EMA and the Heiken Ashi, does give you a bit more precise entry and exit. But it's just to reinforce the same sentiment again. So in certain ways, it can be quite distracting to use volume again, because it does give you the same signal as using the EMA and the Heiken Ashi. But it's important for us to understand the dynamics of it, because every time when you see trend change, volume should be strong. If the trend change and volume is not strong, that's usually something that you should be careful of as well. So you look at it, every strong green colored or every strong red candle bars are followed by strong volume. So volume is a very good indication and in a way to support your trend identification. So just giving you a few more examples. This is an example on an E-mini Dow Jones. You can clearly see that you have a bearish crossovers on EMA, and you can see red colored Heiken Ashi candles. So that's the point where you take into a short position. Now you look at it, most of the candles are respecting your longer term EMA, which is the 20 period EMA. None of the candles broke above. That means the market is still journeying on a downtrend. So your EMAs can act as a support and resistance level for your candles as well. So this is another example of gold. Do take note that consolidation period is where it gets a little bit trickier. You still can use Heiken Ashi and your EMA, but be mindful that during this period you have a lot of signals of entry and exits. It can be quite costly in terms of going in and out of the market. You could incur heavy transaction costs. So during consolidation period is where whether you take the opportunity to be off the market, or you're going to use a different strategy when you're trading the sideways market. So, but do watch out. Every time when markets are in the sideways market, it's always whenever there's a breakout above those range, it always comes with a very strong rally. Now, obviously, a technical trading plan must come with a strategy to even manage your risk, because if a trading plan without proper risk management is pretty much not a trading plan at all, because we are in a business where it gets very challenging in any of the circumstances, and without proper risk management in place, you could get yourself trouble quite easily. So one of the ways for me to manage my risk is to use what I call ATR indicator, the average true range indicator. So what this tells you is that as long as the market is volatile, I have to manage my risk. I have to manage my risk in a way that I have to be accommodative to bigger range of losses. Because the market is getting volatile. But if the market is getting less volatile, I have to manage my risk accordingly as well. So one of the ways to use ATR indicator is, example is, now say for example, you saw a sell signal on the micro E-mini Dow, and it's and the ATR value is about 80 points. So what I do is that, assuming the market is trading at 34,832, the stop loss level should be 80 points. So that means I'll put a stop loss at about 34,912. And my target, since I'm shorting the market, and you can work 2 to 1 risk to reward ratio, which means that if I'm risking 80 points, I must make sure I'm making 160 points with a 2 to 1 ratio. So my target will be about 34,672 on a short position side. So that's how you use ATR value as a way to position your risk management. So I think conclusion. So that's pretty much sum up on the trading plan. And on the conclusion side, I think Dow Jones, S&P 500, the US indices might still continue on an uptrend. But if the indicators I just pointed out earlier, you look at ADX, you look at NYSE bullish percent index, those indicators are telling you that the uptrend is facing exhaustion. So the risk on the downside is actually increasing. So if you are trading on the market, you have to be very careful. Make sure you have a risk management in place. If you look at gold, I think gold in the short term may not be in favor. Everybody's been talking about, even Jerome Powell is saying, inflation is short term, it's not going to be a long term thing, inflation is not going to be there. And market generally is on a risk on. Whenever market is on a risk on, gold will not be in favor. So I think the narrative for gold in the short term is going to be more onto the negative side. But you look into the medium to longer term picture, I think there's still story to tell for gold, and it's pretty much a positive story. I'm still looking at psychological level at 1650. I don't think gold will break those levels. If gold does break those levels, that means the market actually has a very strong sentiment, whether it's on the equity side, or or other markets. But I think that's usually a sign that generally the risk on is very strong. I think that probability is going to be very low at the moment. So again, I'm still looking medium to longer term story is quite positive for gold. And I think if any downside in gold prices should be an opportunity for you to position yourself to ride the longer term trend. So with that, I'm just going to hand over to Sheila for the Q&A session. But before I do that, I'm just going to end you with a quote from Wentap. I think Wentap is if you are trading the market, you want to learn from the best, get his books. I think Wentap has a very good books on trading. And I just want to share a quote. Most people approach trading to make a lot of money. I think this is a very common notion. And I think that is the primary reason why they lose. So with that, I think I'm just going to hand over to Sheila for the Q&A.
Okay, thank you, David Ang, for a very fruitful and very informative material. Okay, Bapak dan Ibu, pemaparan materi oleh David Ang telah selesai. Jika Bapak dan Ibu ingin mengetahui lebih lanjut mengenai materi pada malam hari ini, kita akan mengadakan kelas trading lanjutan besok pada tanggal 30 Juni 2021 pada jam 2 siang dengan judul Market Outlook Gold and US Indices. Jadi kelas trading lanjutan akan diadakan besok pada jam 2 siang dan akan membahas mengenai summary atau ringkasan pada materi hari ini, tapi dalam bahasa Indonesia. Kemudian kita juga akan membahas mengenai detail produk, terutama di gold dan juga US indices. Dan kemudian kita juga akan membahas mengenai cara menghitung profit dan loss jika Bapak dan Ibu trading futures di Phillip Futures. Oke, baik. Bapak dan Ibu, sekarang kita akan masuk ke sesi selanjutnya, yaitu adalah sesi tanya-jawab atau Q&A session. Jika Bapak dan Ibu memiliki pertanyaan, Bapak dan Ibu dapat mencantumkan pertanyaan langsung di kolom chat di sebelah kanan layar Bapak dan Ibu, atau bisa juga mengirimkan pertanyaan melalui official WhatsApp kami di 0855 9906 525. Baik, we already do have some questions as, okay, I'm gonna read it to you.
Yeah, sure.
Okay, the first one is, what will be the key drivers that affect gold prices until the end of year of 2021?
Okay, thank you for the question. I think that's a very good question. I think there's a lot of key factors to watch out for. I'm just going to summarize into two. I think firstly, you have to look into your interest rates by US FOMC meeting. There's a lot of talks that, no need to wait until 2023. I think by end of this year, there's possible going to be a rate hike, and I think that set the tone. So, as interest rate is expecting to go higher, I think market would generally be in favor of the equities market. So gold may not be in favor. So that spells downside for gold. But obviously, on the other hand, we are in a pandemic. Obviously, there's talks of new variants. Some certain economies they start to reopen. Then, now they are starting to be a bit more careful because the new variants are starting to spread. So obviously, this may cause jittery in the market, and therefore, I think gold will likely be in favor in those times. So I would like to, just to summarize, I think first thing is pandemic is still here. So obviously, gold might still have a bit of advantage. Secondly, I think FOMC meetings are a key driver. So do watch out on those meetings.
Okay, we move on to the next question. Will gold next trend going bullish? Because it seems cryptocurrency are losing their hype recently.
Yeah, okay, I get this question a lot. There's a lot of opinions, when it comes to crypto and comparing it with gold. I'm not going to go too much on crypto, but I'm just going to give you my side of opinion. Obviously, I think these two share a similar class of asset right now. Both are also viewed as asset classes respectively. So obviously, you see the market is like this. When equities market is rallying, and when equities market stops to rally, there's always a shift of asset. Those money that is in the equities market, where are they going to go? So the most common asset that they're going to go besides equities market is the gold market. Obviously, there's a bit of competition of late. The crypto market is starting to appear a bit more in the mainframe. So I would say is, the bullish trend in gold market might also spell the parallel trend in the crypto market as well. But eventually, I think gold will always stand in favor, and I still see that the bullish trend in gold in the longer term will still be there.
Okay. Next to the third question. What time frame is the Heiken Ashi best suited?
Now, that's again a very good question. Now, that depends on the type of product that you're trading. If you look at some of the examples that are given, the gold market, if you're trading on the micro gold market, you can probably adjust your time frame on a longer term basis, because gold is naturally less volatile during normal market conditions, as in there's no news activity, it's a normal market. Generally, gold will not move that much, so you should probably use from a daily time frame. Even the lowest time frame you should be using is only an hour. Anything below an hour, you get a lot of false signals on Heiken Ashi. Now, if you are trading on the micro E-mini Dow Jones, that's where you need to use smaller time frame. I'll recommend the 30 minutes time frame for using the Heiken Ashi whenever you're trading the micro E-mini Dow.
Okay. Next question. As a newbie, your suggestion is trade gold futures directly or through ETF?
Now, as a newbie, trading ETF, it depends on your objective. Actually, it depends on your investment objective. Now, trading itself, obviously the best instrument that you can get involved if you're trading any asset classes is to go into the future space. And I think if you look at the micro gold or even the micro indices, they provide you a very good platform for you to be engaging in the market because of the size of the contract. So if you're someone new to the market, you want to try trading, highly recommend the micro contracts because that's where you are not so leveraged and you're able to adjust your risk to reward adjustment better before you move on into bigger contracts. So I would say, if you wanting to trade the market, especially the gold market, I think the futures contract, the micro gold futures contract is good enough and sufficient.
To the next question is, what is the minimum deposit to open account in Phillip Futures? I think I'm gonna answer for this one. Untuk Bapak dan Ibu sekalian, untuk membuka akun di Phillip Futures dibutuhkan deposit minimal, yaitu adalah sebesar 500 US dollar. Tetapi balik lagi, untuk margin dari setiap produk berbeda-beda, tergantung produk yang ingin ditradingkan oleh Bapak dan Ibu. Nah, untuk mengetahui lebih lanjut mengenai margin per produknya atau bagaimana caranya, Bapak dan Ibu bisa mengikuti webinar kelas lanjutan besok jam 2 siang yang berjudul Market Outlook Gold and US Indices. Kita akan membahas secara lebih dalam dan lebih detail di webinar tersebut. Okay, there is another question, the last question. With the current market condition and the Fed very optimistic for US economy, is gold still a good instrument to invest? Because gold is the safe haven, and when economy is good, investor will invest at risky asset, if I am not wrong.
Yeah, I agree with the audience narrative in a way that right now we are in a risk-on sentiment. Everything looks good, so everybody will be going into the equities market. Obviously economy is doing well. There's no reason for you not to be in the equities market. Now, what is worrying is that as you look at valuations, you look at certain justification of factors like certain indicators, economic indicators like unemployment and whatnot. Even those are showing you positive sign, but those are also showing you a bit of peakishness in terms of their sentiment. There'll definitely be a point in time where market will have to adjust. And I think when market is adjusting, and whenever you have a high valuation as what you are seeing right now, it's going to be a very steep adjustment. So as I said earlier on, whenever markets are moving out of equities, where were they going to go? They're either going to park certain assets into, like I said, crypto is now recognized as an asset class. They might park into crypto, but a very good alternative is always gold market, because again, I think gold is historically proven, especially when time of crisis, gold always retains its value. So I think what is important to take note of is, despite you are seeing good economy recovering in US, a lot of people are in the equities market. But again, when those adjustments are coming, interest rates hike is coming, Federal Reserve is tapering, there's going to be pressure. So I think that's something to watch out for. And I think eventually people are going to move out from equities market, and they're going to move on into alternative asset class, which is gold into a certain extent.
I think that is the last question asked, and we will go to the next session. Oke, Bapak dan Ibu sekalian, kita telah menutup sesi tanya jawab. Nah, jika Bapak dan Ibu ternyata masih memiliki pertanyaan untuk ditanyakan, kami akan mencoba untuk menjawab pertanyaan Bapak dan Ibu melalui webinar kelas lanjutan besok. Baik, izinkan saya untuk menginformasikan kepada Bapak dan Ibu sekalian, mengapa trading di Phillip Futures merupakan pilihan terbaik buat Bapak dan Ibu. Yaitu adalah yang pertama, open today, trade next day. Kami memiliki sistem online account opening yang sangat user friendly dan mudah sekali. Jadi besoknya Bapak dan Ibu bisa langsung melakukan trading. Nah, kemudian more than 100 exchange traded products. Kita memiliki lebih dari 100 produk yang bisa ditransaksikan oleh Bapak dan Ibu. Web-based trading platform dan same day fund withdrawal. Setiap harinya, Phillip Futures juga memberikan adanya berita global harian mengenai komoditas, indeks saham, dan juga mata uang. Nah, kami memberikan atau membagikan berita tersebut melalui sosial media dan juga website kami di www.phillipfutures.co.id. Nah, di dalam berita harian tersebut terdapat analisis fundamental maupun teknikal untuk berbagai produk atau berbagai komoditas, saham, dan mata uang. Selain itu, kami juga memiliki berita mingguan yang kita sebut dengan Weekly Market Outlook yang kami update di sosial media dan juga YouTube kami di PT Phillip Futures setiap minggunya. Nah, pada saat ini kami memiliki promosi untuk Micro E-mini US Equity Index, yaitu dengan low commission serendah $3,8. Dan juga dengan adanya free market data dan juga free biaya swap. Promosi ini akan berlaku sampai 31 Desember 2021. Nah, selain adanya promosi Micro E-mini US Equity Index, kita juga memiliki promosi untuk gold, yaitu sebesar $5 untuk komisinya. Trading platform kami dapat diakses melalui handphone, melalui browser, laptop, ataupun PC. Jadi bisa diakses dimanapun Anda berada, baik di rumah ataupun dimanapun. Jika Bapak dan Ibu ingin mempelajari futures trading dan ingin mengetahui lebih dalam mengenai produk-produk di Phillip Futures, cara untuk trading, cara untuk menghitung profit atau loss-nya, Bapak dan Ibu juga bisa sign untuk one-to-one coaching yang kita dapat lakukan juga secara online untuk menjaga social distancing. One-to-one coaching akan dilakukan oleh wakil Pialang Berjangka dari Phillip Futures yang pastinya sangat berprofesional. Bapak dan Ibu pun dapat men-sign dengan gratis. Kantor kami ada di Atria Sudirman, level 23B. Nah, jika Bapak dan Ibu ingin mengkontak kami, dapat menghubungi kami di official WhatsApp kami atau di nomor telepon 021 5790 6525. Email kami di futures@phillip.co.id. Website kami di www.phillipfutures.co.id. Jangan lupa juga untuk follow sosial media kami, Instagram di Phillip Futures, Facebook di PT Phillip Futures, Twitter di Phillip Futures, dan juga YouTube di PT Phillip Futures. Baik, we would like to thank David Ang for giving such a fruitful and informative material for today. Thank you for presenting very greatly.
Pleasure is all mine. I just hope that the audience are able to learn something, able to get something out of tonight's presentation.
Yes, sure. Terima kasih Bapak dan Ibu telah menghadiri webinar ini dari awal hingga akhir, dan sampai bertemu lagi di kelas trading lanjutan sekali lagi besok yang berjudul Market Outlook Gold and US Indices. Besok jam 2 siang. Kami akan mengirimkan link webinarnya besok pagi kepada seluruh peserta pada hari ini melalui email dan juga WhatsApp. Sekali lagi, thank you David Ang. Terima kasih Bapak dan Ibu, dan sampai bertemu di kesempatan selanjutnya. Terima kasih.
Thank you.
Bye-bye. Thank you.